Hello and welcome to Business Live. Coming up in this bulletin, market leader Star Oil finally increases price of petrol at the pumps but keeps the price of diesel unchanged. Also in this bulletin, visiting IMF team begins technical engagement with government this week. Is Ghana on track to meet its revenue target? We are live with a tax consultant. The U.S. government signals intention to extend African Growth and Opportunity Act program for a year, a move expected to bring some huge relief to Ghanaian exporters. There are these and more coming up in this bulletin. My name is Winston Taki. Stay tuned, right back after this. Now, this is Business Live. Now to our first business story. Market leader Star Oil has finally announced an increase in the price of petrol at the pumps from this morning. There is more in the following Business Desk report.
Star Oil has gone ahead to increase prices at the pumps after almost 2 weeks that the values should have gone up at the pumps from the middle of this month. The firm on September 16 also kept prices unchanged despite the fact that prices should have gone up at the pumps at that time by some significant margin. However, with just a day before prices are likely to be reviewed for the month of October, Star has gone up. The price of petrol has been increased by 40 pesos, and a litre is now selling at 13 Ghana cedis, 17 pesos. Star Oil in a social media post said the move was influenced by the recent hikes in crude oil prices on the international market, as well as the pressure on the Ghana cedi. Most of the oil marketing companies that have gone ahead to increase prices have linked it to the recent pressure on the Ghana cedi. So far, among the major oil marketing companies, it is Star, Gold and Shell that have increased prices at the pumps over the past 2 weeks.
Now, moving on, is Ghana on track to meet its revenue target and keep spending in check under the IMF program? That's one of the several key issues expected to be discussed as the visiting IMF team begins its engagement with the government this week. George Biafe has more in this report.
The visiting IMF team is going ahead with what some may describe as real engagement and scrutiny after their opening meetings with the Finance Minister, Dr. Atuforson, and Bank of Ghana Governor Dr. Johnson Isiama yesterday. For this fifth review, the IMF team will be assessing the economic data of Ghana up to June this year. However, the firm would also want to stretch it to cover the full fiscal performance for 2025. The IMF may want some answers when it comes to the status of the audit of the 2024 arrears and the plan to clear it as well. On the energy sector, the fund will be seeking some update on arrears clearance as well as plans to ensure that there is full cost recovery. When it comes to the banking sector, this week engagement could see the IMF get some clarity on Bank of Ghana's foreign exchange framework as well as the Bank of Ghana's dollar interventions. The IMF mission team is led by Dr. Rubin Itoyam, who is leading the IMF mission to Ghana, and they should end their engagement in the next 2 weeks.
Now, let's go on Zoom and speak to tax consultant Francis Tumoboy for more insight on this development. It's good to have you here on Business Live, sir. Now, meeting the revenue target is still a big issue for government under the IMF program. Do you hold the view that on the side of revenue collection, government will pass the review?
So, Winston, my considered view is that the revenue targets, even though it's possible, we can achieve it. It could be challenging. Success is possible, and these are my reasons. At mid-year, we were told that revenue performance was about 44.5% of the annual target, for which some of us thought that it was a positive sign. However, in the same mid-year budget, the Minister of Finance came to declare that customs, which is a major category of our revenue, was underperforming. We were down by close to 1.6 billion, which suggests that even though you will be doing well, if you have major tax handles like custom falling behind, it will draw down the total taxes. Another big issue we have is that historically we have what we call structural, taxing capacity, which we use the tax to GDP ratio to measure. Over the years and for a very long time, we are unable to collect much from our total, GDP that we produce. So there's a slack in the system. We can't change that overnight. Again, we have seen a number of, evasion and smuggling, especially when it comes to gold. So you see that the revenue that we are supposed to get from that angle, government is losing it. And so if you put all of these things together, even though GRA in 2024 achieved their target by 5.2% excess, I think that there's real danger that government may not meet its revenue target. And so I will lean to a very narrow pass or borderline if government should even achieve the target. It's going to be very tough, especially because some of the tax handles that we saw in the mid-year budget came somewhere July. And from July to date, you realize that their total contribution to the tax pool will be very limited because we didn't roll it out early enough. So I think that success is possible, but it's going to be very challenging.
You highlighted systematic hurdles and indeed the gold smuggling and related activities. But the budget is expected in November. Do you foresee government making some revenue proposals ahead of the budget if the IMF team in town decides to consider that?
Obviously, and I think government will always want to give promises that things are in the pipeline. So government will want to throw in some, signals that there are going to be, new taxes introduced. Already, we have heard the minister during the mid-year budget saying that VAT is going to receive a major reform. So hopefully that will also be driven. And some of us have participated in some of those engagements, which was, driven by the IMF. So that may be highlighted. Again, the government will also want to politically prepare the ground before the mid-year, the main budget is read. So we can't rule that one out. We hope that government will give more, hopes to the IMF that we are on course, even if we miss the revenue target. So certain announcements may be made ahead of the 2026 budget, which will be ready in November.
On other issues, we have heard some companies complain about influx of foreign goods, particularly beverage products without tax stamps. Do you think there should be a renewed effort to clamp down on this problem, or the GRA must use new approach such as technology to stop this canker?
Obviously, the influx of these foreign goods without the tax stamp is a major concern. You remember the tax stamp is a major compliance tool when it was introduced in 2013. And I think that the current approach, which is the raid and seizure of the goods which are not stamped, is more reactive. So I agree with you that a new or renewed, compliance measure would be to combine the clampdown with technology, such as scanning potential containers. Some of these importers refuse to, put the stamps, and they may hide some of the goods in containers. So why can't we use technology that will be able to detect accessible goods which are passing through our borders, which we do not get the chance to collect the excise stamp and then the VAT from it. So technology is the way to go. And again, I think that the borders, certainly if they are being smuggled, it's coming through the borders. So what are we doing to, deal with the borders smuggling? And for me, I'm happy that the Minister of Finance announced in the media budget that custom is one area that they are going to really check. But I think that if we combine the existing seizure with technology, it will really solve our smuggling problems. It's a major revenue leakage that government must pay attention to so that it will help it achieve the revenue targets.
Briefly, before I let go of you, the removal of the COVID-19 levy on major consumables in the country, is there a possibility or just a wishful mirage?
No, I think for now we are very certain in our mind that the minister meant what he says, and so it's going to form part of the revenue, the VAT reform that is promised in the 2026 budget, which will be read in November. We are sure that it will go. What we are not too clear is that after it goes away, whether it can come back in another form, because removing this revenue without replacement will really hurt government. But they've promised in the manifesto. We have seen the signal, even though most people were expecting that it was going to be removed in the mid-year budget. Now we have been told vividly that it should move away. So by 2026, we do not expect it to be on our tax laws.
Great. We appreciate your time here on Business Live. Francis Tumaboy is a tax consultant showing highlights on key issues involving the tax structure and the plans of government going into the next mid-year budget presentation. That is possibly to happen in November. Now, away from that, the African Growth and Opportunity Act, a crucial U.S.-African trade deal, expires today, and the Trump administration is pushing for a one-year extension, but with no guarantee Congress would act in time. The future of the key trade pact hangs in the balance. Joining me is the Greater Accra chairman of the Association of Ghana Industries, Chinam Akpelu. It's good to have you here on Business Live. Are some of the members directly beneficiaries of this AGWA program?
Good evening to your cherished listeners. Yes, we have a lot of our members who directly participate under the AGWA initiative.
How is the current uncertainty affecting your members who will now be subjected to some tariffs and duties from tomorrow?
Well, in the immediate terms, it's a bad news because obviously we're going to be losing revenue directly, and jobs will be affected directly because imagine that 15% or so tariffs have to be paid as a result of this particular directive. Obviously, it would add up significantly to the cost of production and will affect many things, including the sustainability of most of these businesses and so on. So in the short term, the effect will be huge, and all the participants will feel it, but as well as all the other people who rely on this company. The only hope we have is that in the medium to long term, we hope to be able to make sure that we turn this into rather an opportunity for Africa. We probably have to begin to look into Africa more. And mind you, Africa have over a billion people. US has about 300 million people. So actually, the African market is bigger. What is lacking is making these markets realizable, because the African market needs to be developed so that we can be able to trade between and among each other. So this is why after become very strategic at this moment, we really have to quickly look into within Africa in doing business. Also, very recently, the Chinese government have announced a removal of taxes and duties from products from Africa. We believe that we can begin to look into those markets very quickly and see how we can take advantage of them. But suffice to say, though, that the American markets have been highly developed. America, it's a highly consuming society, and so it is easier and more structured and so on. and more friendly to our businesses. So it's easier for us to
Great.
trade in the American market. Also, the AGUA initiative, because it's been around for about 25 years, it's been several years of learning and perfecting and making sure that we have it delivered.
Interesting. I want to get from you,
We,
with the pact expiring today, have you heard from government in terms of what is next for the association and basically for your members?
well, for government, I'm sure we're yet to have a formal communication to this effect. But if it's ending, it's ending. I'm not sure what we can expect government to say, except for them to let us know the alternative plans they've got for industry and ensure that we continue to trade and expand our businesses. But it's important to mention, though, that look, we should go back and negotiate. African governments should come together. The African diplomats sitting in New York, they should come together as a bloc. Let's leverage on the resources we have as a continent to renegotiate, because the posture of the current US president is really about transactions, it's really about negotiating. What are you bringing on the table? So my view is that they should go back and negotiate and make sure that they're able to secure something better. Take the visa issue, for example. It's been reversed. It's all because of negotiation. We
Great.
believe that if African leaders take up this, they can really negotiate. That notwithstanding, it is still very crucial that we develop the African market and ensure that we deepen the AFTA initiative so that our companies can produce and sell within the African continent.
In the light of this, what is your next line of action, especially for your members?
Well, we fully know that it's a difficult moment at this stage, that they are going to be losing money, but we'll quickly support them with our research department to help them with information that will allow them to enter other markets that are useful. And with that, we hope that we can quickly venture into other markets and get our members to diversify their production.
Thank you, Chinama Kwalu, for spending time with us here on Business Lab. We have more business update right after this break. Stay tuned. Welcome back to Business Live. My name is Winston. Taking now to more news. Ghana is strengthening maritime security with the new patrol vessels and expanded surveillance systems as the Ghana Maritime Authority deepens collaboration with the Navy. Director General of the authority, Dr. Kamal bin Ali, speaking in Tema, says the move is critical to curbing accidents, illegal activities, and environmental risks across the country's inland waters and ocean space. Here's more.
Ghana joined the world to mark this year's World Maritime Day. Safety, security, innovation, and environmental protection were the focus for Ghana Maritime Authority. Management used the occasion to share ongoing reforms aimed at strengthening the nation's maritime infrastructure. These include the deployment of a search and rescue vessel at Pando Toko on the Water Lake, the establishment of an inland water unit based at Akosombo, and steps to fully operationalize the offshore patrol vessel Esther Oklu in partnership with the Ghana Navy. Director General of the Ghana Maritime Authority, Dr. Kamal Ali, also highlighted major technological advances.
Over the period, a new VTMIS has been acquired by the authority with extended capability across the maritime space, up to 200 nautical miles with over the horizon potential. That is also being installed soon, and His Excellency will have the opportunity of commissioning it soon again to make sure that our maritime environment is safe and secured. We are not only looking at infrastructure, but we are also realigning our manpower, which you will all agree with me is the most essential capital that we have.
Board Chair Jemilat Mahama underscored the ocean's role in sustaining livelihoods while warning of threats from climate change, pollution, and biodiversity loss. Director in charge of General Administration at the Transport Ministry, Richard Fidiele, representing Sector Minister, says the ocean is Ghana's economic anchor.
For us in Ghana, with our rich 550-kilometer coastline and our strategic port of Tema and Takoradi, the ocean is far more than a boundary. It is our economic anchor, a guarantor of food security, and our most critical gateway to the global economy. As being conveyed by this year's theme, obligation and opportunities are not mutually exclusive. They are two sides of the same coin. Our solemn obligation is to protect our precious ocean.
Meanwhile, industry stakeholders, including Maersk, the Ghana Ports and Harbours Authority, and the Importers and Exporters Association of Ghana, reaffirmed their commitment to sustainable practices that safeguard the oceans and the ports. The theme for this year's celebration was Our Oceans, Our Obligations, Our Opportunities.
Away from that, cement sales have fallen sharply to just over 200,000 units as of August this year, according to the new data released by the Bank of Ghana covering economic activities in the first 8 months of the year. More details in the following report.
The development can be described as interesting, especially at the time that the data again suggests construction activities in the country have picked up. This was after government started advancing money as payment to some contractors for projects that were frozen last year. It was also after the current administration commissioned an audit into their work. But the Bank of Ghana data again showed sales have picked up from the beginning of this year. However, it started dropping to this new level from the middle of 2025. The release of this data is coming at a time that cement manufacturers have complained in recent times about the influx of smuggled cement products from neighboring countries. So could it mean that all the products being sold on the market are not being captured?
Thank you for watching today's edition of Business Live. My name is Winston Taki. Have a good business day. Bye-bye.